Hey, Boris Musheyev here. Welcome to another tax strategy video. And in this video, I will show you how your state government, what actually your state government did for you, right? Very recently, to help you write off 100% of your state income tax on a federal level, circumventing what on the federal level is limited, okay? And at the same time, give you a tax credit for it. Ready? Let's go. Right, awesome. So before we understand the what the PTET tax strategy is, right? And the PTET basically stands for Pass-Through Entity Taxation. Okay, in 2018, when we had a new tax law, Tax Cuts and Jobs Act, okay, one of the things that was passed in that law is that from now on, you are limited to how much you can write off in your state income taxes that you pay on the federal tax return. So if you itemize your deductions, you cannot write off more than $10,000 of state and local taxes. That includes state income taxes, and that includes local income taxes, and that includes your property taxes. Some of you pay very high property taxes. For example, let's say $7,000 of property taxes, plus you pay state income taxes on the income that you earn in that state, you pay taxes. But the overall deduction, you could get the overall deduction, combined with your state and, property taxes and state income taxes. But now it's limited to only $10,000. When that law was passed, states were outraged, right? They were really upset. They tried to come up with all the creative ways to circumvent this limitation that you as an individual are getting on your personal taxes. The states were fighting for you, right? So they were unsuccessful in a lot of attempts, but one attempt that became successful in is that they said, you know what? The people that own businesses, right? Maybe we can do something for them. How about we create what's called a pass-through entity taxation? What does that mean? So let's take, for example, you have a business and you run it as an S corporation. S corporation doesn't pay any corporate tax level, right? Corporate tax at a corporate level, I should say, right? All the income is passed through to an individual. An individual pays taxes on his personal income tax, may it be federal, may it be state. So the state said, how about we do this? How about we tax these individuals, these businesses on the state level? Right, so if you make $100,000, they're gonna make you pay 6% tax on that, right? Every state is different. It depends on each state. The taxes vary from anywhere between 3 to like 11%, depending on the state, okay? So they said that we're gonna make this individual pay tax for the business. Because you're gonna pay that tax, the state says we're not going to double tax you. You're going to receive a credit on your personal income tax for the same tax that you paid on a business level for your S corporation or your partnership. So really, you're getting a wash, right? Instead of paying your personal income tax, you're paying a business income tax. So why is that helping you? Because when you're paying it on a personal level, the tax that you pay on a personal level is only deducted up to $10,000. But the tax that you pay on a business level, there is no limit for that. So that's why states have passed what's called PTET tax, Pass-Through Entity Taxation. They're going to tax you on your business income to give you a benefit of a write-off. Now, a lot of accountants, I hate to say it, but they don't do it. They don't do it for their clients because number one, it's new. And number two, it's not very common to do, and it requires some work on the accountant's part, right? But what I urge everybody to do who's watching this video, please speak to your accountant about PTET. Ask them, hey, what's my PTET and how do I pay it and how do I take advantage of it? Most states have adapted PTET, okay? Pass-through entity taxation. Remember, you're not paying double tax. You're gonna get a credit for it, and it will allow you to get a deduction on your federal income tax return. How? Because that income is being passed through to you from an S corporation on which you already took the state tax deduction, okay? Now, few things for you to note. Number one, PTET is voluntary. That means the states do not impose it on you. You have to voluntarily apply for it. And I said it's pretty new. A lot of states start rolling it out in 2022, and it's effective for some states actually in 2023. But the states give you a warning. They say that you have to make that election to pay that tax. They cannot make you pay it, right? So What you need to do is find out when is that election deadline for 2023. Some of you can still apply it for your 2022 taxes. We prepare a lot of tax plans in our firm, and every client that we do tax plans for, PTET strategy is there. It's either for 2022 or 2022 and 2023, saving tens of thousands of dollars on taxes for our clients. So you want to make sure you speak to your planner. Okay, look, if you have a tax preparer, you do not have a tax planner, you want to make sure you're utilizing PTET strategy. Number one, find out if you can still make an election for this year. If you can, apply for it and see if it works for you. In most cases, we've seen it works for clients, but we do analysis for all the clients. So make sure you are doing that analysis for yourself as well. Hey, if I pay this tax, does it make sense? How much am I itemizing? How much am I already writing it off? Now, if you are in the states like Florida and Texas, no state income tax, this doesn't apply to you, but it's good to know, right? But many other states have state income taxes, and many states have adapted the PTET tax strategy. So you want to make sure that, hey, do I qualify for it? And if I do I want to apply voluntarily for this year or next year? And what is that going to look like in terms of savings? We just did a tax plan that we're delivering today or tomorrow, but I met with my senior tax advisor, and one of the strategies there is PTET tax strategy, saving client $5,000, close to $5,000, it was like 4,900 and change. Why? Because that is a strategy that you can use, but a lot of people don't look at it that way, and a lot of accountants and tax preparers don't do it for you. I'll tell you why. Because most of the states have put the deadline to apply voluntarily for this tax up until March. So you've got January, February, March. Most states, well, some states have after March, right? But you can be watching this video anytime during the year, and the time to act is right now, whether it's for this year or it's for the next year. But you want to make sure you apply. For example, with New York State, we have to apply. We have until October 15th deadline, which was really originally March 15th that I've extended it. Some states say you don't need to apply separately, you just need to check off a box on your tax return, okay? Depending on your state, definitely check with your planner. If you don't have a planner, get a tax planner for yourself. The only way you can pay less in taxes, ladies and gentlemen, is by having a tax plan, working with a tax planner, with a tax strategist, not a tax preparer. Tax preparer's job is to put the right numbers in the right boxes, all right? If you got a tax preparer, you do not have a tax planner. Okay, with that being said, I hope this was helpful. Let me know in the comments any questions that you have, anything that is not clear. Either myself or one of my team members will take care of those comments and respond to them. Thanks so much. Until the next time.